Vincenzo's Gold Crypto Investing this June the 4th, 2025 daily cryptocurrency XRP and blockchain technology video noontime update that you've come to expect, love, need, and deserve from the station that's there for you and started and created for you to educate and inform the retail trader and investor. And this is one of the only, if not only, channels that do that with a probability based industry exclusive company made YouTube to YouTube channel algorithm that we use with a basket of indicators and goods that go into creating our future forecast. And we have our own personal investing philosophies. But one of the critical things that has to do with investing in any asset is dollar devaluation. And we don't take enough time here on this channel talking about this. And we're going to start emphasizing and educating you more on the dollar devaluation, currency devaluations, and things like that because it's very important and it has a direct correlation and impact on your investments that you're trying to make. How the dollar is devalued. Devaluation of the US dollar usually means the dollar loses value compared to other currencies or buys less than it used to. This can happen in several ways. Inflation, when prices rises, when prices of goods and services rise, each dollar buys less. This reduce in the dollar purchasing power is not officially devalued, but it behaves like it is, caused by excessive money printing, monetary stimulus, fiscal and monetary policy, supply shortages, right? That artificially will, or that in a very short term can jack the price up of the price of goods artificially higher than they should be, just like when there's a hurricane and the power goes out and you can't get gas or you can't refuel the gas stations, the price of gas goes up, the price of water goes up, the price of the supplies go up to keep things in demand because you can't resupply. High demand outpacing supply. Exchange rate decline when the dollar loses value against other currencies like the euro, yen, and yuan. It's officially weaker, and that happens when you inflate the money supply, when you print or add currency to the purchasing power to the circulation, which the governments do that. That devalues the dollar. If you add a billion US dollars and no billion euros with it, the dollar is being devalued to the euro. This happens due to lower interest rates set by the Fed, which I believe that is false. The dollar gets devalued when they lower rates artificially, while at the same time producing monetary stimulus and increasing the money supply, large trade deficits, which is true, which we have, reduced demand for U.S. assets, political or fiscal instability, how a weaker dollar can uh, affect assets. A devalued or weaker dollar isn't always bad. In some cases, it can help the economy. Here's how it boosts exports. U.S. goods become cheaper for foreign buyers. This helps American manufacturing and exports by increasing sales abroad, which back 100 years ago would have been great. But in modern times, where we're currently at in the United States, manufacturing uh, excellence is we don't have very much to export because we don't manufacture very many things. Uh, and also, it says it could be good for cheaper buyers. While we living here at home domestically don't care if it's cheaper for somebody in Japan to buy our products from here, when our products here at home are growing more and more expensive because our currency is being devalued. Encouraging domestic spending, foreign goods becoming more expensive, so consumers might buy more made in the US products. Another conundrum is, again, we don't have very many products made here, and the products that are made here are vastly more expensive than the products that we import, right? To supply domestic businesses and jobs, in theory, that would be good, but in practice, we don't have the manufacturing uh, to satisfy the demand that it would take at a cheap enough price for our consumers to buy it here abroad or domestically, right? And export rises and imports fall, the trade balance improves. This can be good for the overall economy. In theory, yes, but we don't really have a way to do that. But it all has downsides. A devalued dollar isn't positive. Imported goods and travel become more expensive. Inflation can worsen, especially for energy, food, and tech, housing, like we've already seen now, gas, food, especially clothes, things we need to live from day to day lives, lower real wages. And you say, and this is something else we'll get into here in Vincenzo's Gold Crypto Investing. So you, yes, my retail traders, you, my lovely audience, are informed and educated, right? The fleece, heist, and shice, the criminal and market manipulators. Lower real wages work like this. Say today, my boss came in and gave me a $10 an hour wage increase. So I got a raise of $10 an hour, right? and say that we'll make this easier. Say I get a $30,000 a year increase in my salary for the year from my boss today. My wage went up, but now say inflation was going up so fast that in 1 year, my cost of living went up $40,000 because of energy, food, gas, just clothes, everything that it costs to live. And we had hyperinflation, just to make the point. Even though you got a $30,000 increase in wages, you're living the same lifestyle from last year to this year is costing you $40,000 more to keep the electricity on, the heat, to wash your clothes, to put gas in your car insurance, your homeowner's insurance, your food bill, right? Your water bill, or all that kind of shit, right? Car note. Uh, and it went up to 40 grand. Your real wages were negative $10,000, right? Because you got a $30,000 wage increase, but your cost of living went up $40,000 in the same year. So your real wages are negative $10,000, right? That's how that works. And we're going to get more and more into that in a little bit and a little way and chip away at the beginning of each video to educate you guys so you can be as educated and as informed and well-rounded as you can be. And that's why we invest in our 401k at Vincenzo's Gold Crypto Investing. That's why we uh, that's why we tell you to invest in a 401k because it diversifies you, right? And diversification is good because you got money working for you in multiple different sectors. And you can see here, and this happens very, very quickly because your 401k, if you're fortunate enough to have one at your job, you have them take it straight out of your paycheck and then you get a match each year. And my work does 4%, right? So it's 4% of free money every year. And you can see it's grown. It's up $10,000 this year, about a little over $10,000. And you can see our balance now. And we started this about 4 years ago, right? 4.5 years ago. And in 4.5 years, our balance is at $99,848.15. And you can see September of last year was at 80,000. December it was at 85. March was at 92, and June was at 99. Right? And it's very important because this is just money that's compounding on itself. And if you're adding into it, you're continuing to buy. And you can see they give you these nice little things. So here's what I have in here right now. The 99,000. If I don't work and put any more money into this, it's saying it should grow to $510,000 by the time I'm 60. But say, just to make this easy math, say I make $60,000 a year and I put that in at 25% out of my check every week until I'm 67, it's saying that that's going to grow to $1.9 million, right? Obviously, a lot of that's inflation, but just by simply investing a small chunk out of your paycheck each week can make a big, big difference. And then you have your money in crypto that's earning and producing money. You have your money in your 401k. You've seen my gold and silver bullion investing in the mining stocks where we have nearly $40,000 invested on all the different sites that I have mining shares in. Then you buy some physical bullion, right? Then you have some cash, right? You have real estate. You have all these different things to get financial freedom, uh, and the things that you're looking for to become wealthy. And you need multiple different things in multiple different sectors to help you become well-rounded and financially stable in all market conditions, right? And that's what we try to do here. And we're going to educate you that and start a new philosophy here on how to educate you better a little bit at a time each day with some education on dollar devaluation, with education and information on the importance of diversifying one's portfolio over a long period of time, right? It's very, very just as important as investing in one thing to become really wealthy and have that kind of generational wealth that you're looking for. It takes persistence, time, patience, uh, and execution to make it happen. And you can see right here with the Bitcoin price, as this is already getting quite long, you can see the price is consolidating sideways. If we zoom in now into the hour time frame or the 4 hour time frame, you can see it's consolidating sideways since it's at its 2.5, 3 day downturn where it's threatening to break out of this rising channel. You can see that right here. See that? I don't know why it's going like that on this. It's kind of irritating. Oh, it's because I don't have It's not showing me the dates down there. Well, let's do this real quick. How long is, oh yeah, it's getting long. We got to really speed this video up. Let's get back into here. There we go. That should solve the problem. There we go. Now we just got to remember to get rid of that. And you can see what we were talking about. Let's get back into this 4-hour time frame. Boom. There we go. See, now we have the dates on there, so now it won't be jumping so far. Into the 4-hour time frame, you can see that track is in the background with that computer algorithm that we use. These are just some of the tracks and part of the probability-based system that we use. And you can see the tracks, we're showing it go down. Do not want to buy you. The price started to go down here the last couple of days, threatening to break out of this rising channel here on the 27th of May. Had a 2 to 3 day, 4 or 5% fall from top to bottom was about 6.5%. Now we've had a little up and sideways consolidation just above the 50-day moving average. And what I think is going to happen here, you could, yes, pump straight up and start running up against this upper resistance up here near 115,000, just below that upper target that we've had since this rebound started. Or option two is you fall now to the 100-day moving average right along this critical 97,185.38 horizontal left to right major underneath support level. That's where I think in the immediate short term that this is going to be going the rest of this week. So we're going to continue to pay attention for that and line it up and see if we're going to have a volatile weekend this weekend. The Ethereum price had a bounce today, and you can see it's still in the same pattern, trying to decide if we're going bullish. And you do know if you go bullish, first, though, the pattern, you have the big 48% pump here. And now you got this Bart Simpson pattern where you have the spike, sell off, spike, sell off, spike, sell off, most recent spike, just along and above the 100-day moving average and 50-day moving average, and which are pretty much running on top of each other. If this pumps and breaks out of this area, it'll go straight to $3,058.30. The contrary, if you dump down and breach this 200-day moving average in the daily that's sitting at 24.53, you're going to come straight down to the 100-day moving average, right? Or those moving averages that we were just talking about right there. That's the 4-hourly. These are the daily time frame. If you breach the 100-day moving average in the daily at 22.9347 you'll drop straight down and form that classic Bart Simpson head, right? We have the big pump, the choppy Bart Simpson hair, and then the straight fall down is quick and it look exactly like that, just red on that side, right? So it's a big swing in scenarios. We're going to continue to watch this over the next several days. The same thing with the XLM. You can see we bounced off just like we thought we would, and the track showed that we would on this gusty afternoon, summer-like, warmest day of the season, 81 degrees, Jay. And just north of downtown Detroit, inside the Vincenzo compound in the great state of Michigan, right? And you can see where we had that, oh, you can see the track showed a steady downtrend, and that led us with the confidence that we were going to 18 cents, right? Thought we were going to 18 cents, almost got there, had this ferocious rally, got rejected like we thought we would. We're just below the conglomerate of moving averages in the daily that are right on top of each other, bounced like we thought we were talking about, like we should, at least in the short term. But then we also said these moving average overhead would start using as resistance. And if you break this resistance and confirm that, or support and confirm this and flip it as major resistance for the first time in 4 months, you would come straight down to 18 cents. And something that is straight down in 18 cents, if we look at our other chart and the XLM price, you can see this long consolidation that we've been in. This long consolidation that we've been in for quite some time. And if we go into the monthly time frame, and this is why I think we're going to have a golden opportunity to accumulate. Look at where we've been ever since where nobody had the coin down here when it was vastly below a penny, sort of like the Shiba Inus and whatnot. We had the biggest life-changing rally. Unfortunately, almost nobody here had this coin. It went up greater than 60 times itself, right? That might even be more, 60 times itself. And then look at what we started to form, this symmetrical triangle, right? Where it's trading essentially parallel with descending upper resistance, uptrending lower support. And you can see every time it's been the same thing, and each pump has been getting smaller, right? Each pump in this leg has been getting smaller. The red, the blue, and the green are the moving averages of the 50, the 100, and 200 from top to bottom in the monthly time frame, right? And you can see where you're at And you can see every time you've had a little bit higher of a low, but you've every time had this debilitating flush, hit that all-time high, came down 97%. Then we had the COVID pump, came all the way up. Then we had a 91% dump. And now in our third leg of this pump, in this symmetrical triangle, you can see a 90% dump would get you all the way back down here, which I don't think you're coming that far down, but I think you're coming down to this uptrend here. And I got an exact date that I'm targeting this, and that is over here, late November 11th, 2020. November 12th, my birthday, 2026. I think you're going to hit this 18 cents or before. And then if you once you hit this 18 cents, but if you do it before, you come down to 16, there's going to be a ferocious rally after that, back up into this major upper resistance. And that's where if this ends up one day breaking north out of this in 5 or 10 years, and you have a breakout out of this, similar to the life-changing breakout that you had down here out of this consolidation, and you broke out of it, if you have the similar breakout out of a symmetrical triangle, because that was down there, you could have a target all the way up here in XLM of $18. And I'm not calling for that, but that would be within this macro time frame, nearly 10-year long pattern so far that we're going on right now. But that's what I'm looking at in the short term with the XLM. That's some of the longer term that I'm looking at. And it's very interesting when you look at the chart like that, something that we could be seeing. The same thing with the XRP, as we're still sitting and we bounced off of like we thought we would after getting rejected off that 255. We bounced off the neckline support here the other day. You can see that right here, just above the 200-day moving average in the daily. We're just below in the daily time frame the moving averages in the daily, the 50 and the 100-day, and it's using it as resistance. Now, what you needed to do is to get back on top of this and use it as support, and that'll kick you up very quickly and try to make another charge at this 255, just like where you got rejected back here in early to mid May, right? But if you get confirmed below that, you're going to go back down to the neckline support. And if you get caught on that neckline support in the short term, that could drive you as a confirmed breakdown. And if we look at this in the longer time frame, that could bring you in the short term all the way down here to $1.61 and retesting this local low. And I still believe here this year we will hit this head and shoulders topping out reversal pattern of $1.29, something that we identified for jabroni killers with the first mover advantage right there in that small black circle in early to mid January of 2025. Just after the 340 top, we laid that target down. We put this pattern in yellow there when only this was here. Nothing to the right was there. And then you can see the patterns laid out beautifully. I still believe we're going to end up there. I still believe it's going to happen. Like the channel, help spread the movement, word, and message to help the retail investor and trader get educated with true trust, information, and education. Peace and love as we continue to build this growing movement and army. Jay.